Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code. This is a Forex Super Model weekly review for Monday the 13th of the 9th to Friday the 17th of the 9th, 2021. Right, we've written up the weekly flows, excuse me, for that period. And we're going to start it as we write up the data cycle and the flow cycle and the asset classes. So anyway, here we go then. This is for the week 13th to the 17th, the last trading week. Euro dollar minus 90. So over that period, the euro dollar as an FX pair lost 90 points or pips. Euro yen minus 94. Euro pound plus 8. Pound dollar minus 107. Pound yen minus 112. And dollar yen plus 1. If you plug that into the formula, you get a negative opposed driver in the pound at minus 227, front and back door flows, mainly going into the yen at plus 205, into the dollar at plus 198, and the euro was the negative rock at minus 176, activity plus or minus 403. Right, so we'll stop that there and write up the asset classes. Don't go away. Right, we're back. So we've written up the asset classes. So US dollar index, basically we've had a breaker to the upside in the US dollar index. It's plus 0.29. 29% above our modelled resistance. So and gold certainly will not like that, and it's come off to 0.33 from the floor, so it's 33%, a third above the modelled floor. Oil is also a third above the floor. Generally, gold and oil don't like strong dollars. Wall Street, S&P and tech, they've all come off. Wall Street's 0.45 from the high. S&P 0.42 from the high, so similar, and the tech has come off less, 0.26 from the high. So equities are all soft as for the week. US 10-year, this is the price. So we've had a big thump down in the price. So we've got a yield rise in the US 10-year. So it's near the price floor. Likewise with the bund. The European price has been thumped down. The yields are at or near their maximum. So in model terms, copper has been chopping around in range, and it's now 0.25 from the floor. It's gone down. It's softer, but it's still within its range. And US steel likewise is soft at 0.29 from the floor, 29% from the floor. Right. So what's going to knock it about next week? We've got very little happening on the Monday. Tuesday the 21st, we've got the RBA Reserve Bank Australia minutes. On Wednesday we've got the start of 3 rates decisions. So we've got Wednesday the 22nd, we've got Bank of Japan, JPY rates decision, US rates decision and Fed minutes. The big one on Wednesday as well, and then Thursday we've got the Bank of England GBP rates decision as well. So we've got those 3 rates decisions coming through from Wednesday, 2 on Wednesday and 1 on Thursday. But we'll stop it there and then we'll write up the data cycle and then do the analysis. Thank you. Right, we've written up the data cycle then. So this is our version of the economic calendar, tier 1 and tier 2 events. China then, tier 1 is soft and neutral on tier 2. Dollar tier 1 is neutral, and tier 2 is very positive on the dollar. Germany neutral to on the up. Euro neutral to on the down. So we've got this this divergence between Germany and the bloc itself. Yen neutral to on the up. Pound neutral. CAD neutral to pretty strong. AUD tier 1 strong. Tier 2 pretty weak. New Zealand dollar tier 1 strong. Tier 2 pretty weak. So a similar situation for the AUD and the NZD, interestingly, and the Swiss neutral to soft. So we've got a rates decision. Where is it? So we've got a rates decision there. We've got a rates decision on the pound, and we've got a rates decision on the yen. Right, just to remind you what's been going on. Right, so this week then we've had the pound negatively driving as the opposed negative driver. So we've had a weak pound over the week, driving positive flows into the yen and into the dollar. And obviously we've had an equity, bit of an equity, soft equities, which has tended to help the positive yen transmission, which isn't helpful to us because we're selling the yen complex. And the dollar is getting bid as well, with the euro soft. So let's have a look what we think is going to happen then. So we've got this dollar, euro, yen, pound. So we've got rates decisions on those, on those majors. We've got the Fed. The focus is sort of on this concept of the taper. Are they viewing inflationary, rising inflationary expectations as transitory still, or are they taking them more seriously? And then you've got this sort of situation where the dollar has got very strong tier 2 data, albeit neutral on the tier 1, but it's very strong on the tier 2. And likewise, you've got weak tier 2 data in the AUD and the NZD there. So, and you've also got a strong situation on the CAD. So those two are strong, and those two are weak. So that's negative, and that's positive there. So that's a bit of context for you. You've got the dollar's been bid. Basically, it's broken the model resistance. You've got bond US 10-year yields at their peak, relatively speaking, and the euro yields have followed suit, if I could speak. So you've got a general rise in yields across Europe and the US. You've got a pump up in the dollar, as I said, as we head into the Fed. Equities are starting to not like it particularly. But you've also previously got this situation where the yen has been really bid. So the reason we went full complex short on the yen, and that trade started working out for us early Friday. We were 250 points to the good on that, and then it started turning around after the Michigan consumer sentiment data on the Friday, and the fact that we had this quadruple witching and all the rest of it, and people started to spook up a bit, and we held our ground, and basically we did a bit of swapping in and out, and we're sort of about break even on the new trades, and we've taken about 200 point or pip loss in the account so far. So we've gone from a peak of about 260 points in profit to the moment we've absorbed 200 pip points in loss. So we've had a swing about 450 points on those 7 FX trades in shorting the yen. And as I say, that's mainly due to the turnaround in equities and the bid in the dollar. Anyway, that's what happened there. What do we think is going to happen next week then? Right, well, so obviously people are going to be fairly twitched up. I would suggest that the yen's going to stabilise. As I said, it's very extreme in terms of positive flows. Previously the yen, it's got loads of elbow room to come back, and it's now gone even further. So we expect the yen to deteriorate, and that will obviously be off the back of people getting over this taper idea as well. So it's going to be moody early next week. Monday is pretty much light day today, so that's interesting, and we'll need to see the flows in the Asian session before we make any sensible suggestions on that. But it looks like we'll probably see a bounce in risk on Monday because it's been overreacted. And you're going to see a fall back in the yen, and we're hanging on to our positions obviously from that position. But we'll see how the market develops, and if equities really start tanking, then we'll have to reassess our short yen position. Right, so I hope that was useful. The pound seems to want to be soft, and it's got a rate decision coming. So, and if you look at the pound, it's got a pretty neutral data cycle. So it just depends what happens there. So hope that was useful. So we're looking for a bit of a bounce in risk on Monday. But we'll see. So thank you for watching. See you Monday for the daily briefing.